Welcome Abhinav advanced session, May 18th, 2025. How are you?
I'm fantastic. How are you?
Wonderful. Welcome back. Behind me, I have the free trade. The free trade is important. It's I think, one of the loopholes in trading is where you can go to a good stock, hot stock, and you can go out 3 months, 3 years, 2.5 years, and write a leap, buy 100 shares, write a leap, and get the money back that it costs it to buy the 100 shares, which makes it a free trade. And I think this one's HIMS. HIMS requirement is 40% on Schwab Thinkorswim.
hmm
But you can see, if I'm looking at this right, the call here, you can get 30 for the 60 and 32 for the 50. And I think HIMS was about 64, 60. It was between 61 and 64.
Okay.
So this is a free trade behind me. Take a look at it, write it down. Hims and Hers, not the perfect example because it's a new company, but it's hot to trot. It's growing. Oh, write it down. It's growing in market cap. Follow the market cap growing. So always look at that free trade, and that's something that you don't get with a lot of stocks. Questions on that?
Now, anything different you maybe would do to follow the market cap, or is just basically because it is correlated to price, right? The price is going up, market cap's going up.
Well, I still want to remember that 50 billion threshold.
hmm
So the most powerful thing is when it goes like this between 25 to 40 to 50 and it just cracks through that threshold. It's just growing like crazy. It's like a new thing. Like I run computers. And Hims and Hers is a health product, is a health service. But that's necessary, it's needed. And just to get better at it, like you have right now, you have all the basics because you took the 12 sessions. But now you have to apply those to your benefit.
Right.
So get good at applying those. You had a little picture of a patient's a little chart in our group text.
Yeah.
Patience, man, that's huge for trading, and a lot of people don't even really know how to use their patience, what patience really
I think
is.
this is where the mentoring is helpful because I mean, you and I talk so often, and then you see me from like, I did pretty good last week, and then starting to get kind of impatient towards just trying to find trades to just make money rather than just like, let's let it come slowly, naturally.
Right. So patience, the idea is a proper trader waits for the right time to trade. Right. So what happens in real life is most people are working 9 to 5, and then they're off one day, and they say, "Okay, now I'm off, so I'm going to trade now." Well, that's not how it works. You look at Tesla, and it has a 25-point move up and down, and it happens, let's say once a week. Well,
Yeah.
it's not going to happen on your day off. You need to plan for that, by what the market gives you, not what time you have available.
Yeah.
So you use patience to, if it has a 25-point channel, to buy when it dips, wait, and sell when it swings up. And that's not going to just be on your day off.
Yeah.
Oh, limit orders. Limit orders.
Are these topics you want to go through?
I'm giving you a header right now.
Oh,
Limit orders. Put a limit order for your trade, like trading, right? So let's say you want to do the test of 25 point, right? Well, put a limit order ahead of time to buy Tesla when it dips to your buy point. Now, there's only one drawback of that. Do you know what that is?
it could be that you're catching a falling knife, right? Could dip a lot further.
That's not what I meant. I don't. Um,
Okay.
that shouldn't be the case because when you're trading, okay, you're looking at a channel, okay. let's say Tesla goes between 200 and 300. Okay, let's just say
Mm,
that, right? You're
yeah,
looking at 6 month, the 2 year, the 20 day. And when you say falling knife, you're thinking that it breaks down below support. Okay. That's not really a buy point because that is a falling knife.
yeah,
You wouldn't buy it if it breaks down below support. What you're trying to do is buy
yeah.
it at support
That's support. Yeah,
and when it starts swinging up. Okay.
yeah,
So there's no flying knife. Okay. And that takes patience and timing and what? A limit order to plan for the future. So today you put a limit order to buy Tesla. What you want to trade Tesla? You want to be a trader? Whatever, Palantir, Tesla, you name the stock in the video. Study the channel 6 month, 3 month, 20 day. Put a limit order to buy it when it dips, for example. And this could be buying back your call that you wrote. This could be selling naked put, right? Same difference. And when it swings up, it could be selling your shares. It could be buying back your naked put, right? Makes sense? Does it make
yeah.
sense?
Yes, yes.
The only drawback I wanted to tell you is that it takes maintenance out of your account to do it, to hold that trade. So you could be in a position where you have a limit order to buy Tesla or to trade your Tesla, and it could be like take like 2 months
Yeah, it's
just
holding
sitting
that
there.
buying power.
It's holding up buying power. So it has to be a meaningful trade. It has to be make sense. Some traders don't have a lot of positions at once. They trade just a few positions. And in that case, it's going to benefit them to put a limit order to wait,
Yeah,
3 weeks, a month for that point to hit. And then when it hits that bottom channel, it starts coming up. Your limit order can trigger, or you can do it mentally. You do a mental limit order,
yeah,
but mentally you have to watch the market. You have to really, watch the market. The nice thing about putting a limit order that it'll happen when you're out there golfing, shopping, whatever you're doing, and then it'll. I'm sure you've put orders and then you get like a little notification to hit ding. Do you get that?
you want me
Did
to
you,
tell you a little story
did you
about
get
it?
like a bing? Yeah.
So I was actually putting my daughter to sleep on Thursday for her nap around 11, and the market was kind of choppy, and obviously I had some profit that I wanted to take. I had a target for 360 on Tesla. I think it was stuck between like 340 and 350 that day. And it was kind of choppy. And I was like, okay, I gotta put her to sleep. I'm gonna just put a limit order, stop loss order for 340 to take profit. And I just went ahead and I'm putting her to sleep, and I felt a buzz in my pocket, and I was like, shit, I think that's the order. And sure enough, it was the order that hit while I was, putting my kid to sleep. And so we didn't lose any profit, but yeah, definitely it is nice to set it and forget it to some degree, right? Like you.
Yeah, I have situations that happens when I put my order. Usually it's like to sell or to buy, and when it notifies me, like it goes bing on Thinkorswim
Mhm.
on my cell phone, and that means I got a great buy order or I got a great sell at a profit,
Sure.
and it's all a planned limit order. It doesn't cost you anything to do that. They could charge for that, but it doesn't cost anything to do that. It just takes time, patience, and it takes buying power when you're buying.
Yeah.
And sometimes you have to adjust your order if it's not hitting. Just kind of tweak it a little bit, bring it closer, and that's one aspect of trading that we have to get great at. Um, can you give me a minute?
Yes. I'm good. Yes.
Did we pause it? Welcome back.
Yeah, you're good.
So get good at placing limit orders and having patience. Not to trade when you're off at work or when you have time, but when the market's going to deliver that trade. Questions on that?
No.
Um, I got this from Market Wizards. There's 4 types of trades. You might have read it, but it was something I haven't used in a while, and I need to remember that. Um, there's four types of trades. There's winning trades, losing trades, and then the more important than that, there's good trades and bad trades. And people get confused and think that a winning trade is a good trade. It's not. You can get a winning trade and be lucky,
Mhm.
and that's not a good trade. You can have a losing trade and that be what a good trade. And you can have a bad trade, like just like this is just bad trading, you know. Example, like I was saying, just trading on your day off because you have time and just buying XYZ for no apparent reason. And then the stock going up and you selling and you close at a profit, but that we had you just no rhyme or reason for that, you know. A good trader sounds like something like you have a stock that's going up in a trend, okay? And let's say you buy 100 shares and do a cover call, right? And you look at the channel and you see that it's trading between a range or has a certain trend that the trend will continue.
Mhm.
And then you can do the cover call at the appropriate price, ideally, at the sweet spot. And then even if it comes down a little bit, you'll be okay because you're going to get consistent premium. And that trend of the stock ideally should continue. Let's say I1Q or Palantir, for example, right? Uptrend, correct? So that's a good trade because you have a trend, you have a good premium, and you didn't just write the cover call willy nilly. Ideally, you waited till you got a little upswing because you know it can come down. Or when you bought your shares, you didn't just buy it at the highest price you could. Maybe you waited for a little down in the channel. So you're building your trade. You're making a good trade, planning, stock selection.
Yes.
A bad trade would be like to buy a penny stock and trade it willy nilly, which is I would say a bad choice, a weak stock.
Yeah.
If you're shorting, if the stock has problems, then you need to look at that too. Like remember SMCI. Remember SMCI said they lost their accountant and they're not filing their reports. And I think it went from like 40 to like, I don't know, went to like I think as low as 17 or something.
Yeah.
That would be a good time to sell or to short, right? That's what's called a catalyst. The catalyst meaning something that would drive a stock. Are you familiar with the term catalyst?
Yes.
So when SMCI lost their accountant and were having a problem delivering their numbers, that's a catalyst to the negative side. Um, CATALYST. And a good trade would be to short or to get out. And a bad trade would be, oh, it's bad news, so let me buy the stock, right? That would be going the wrong way. So you have a catalyst check, which is good or bad. Good or bad. You have you're trying to plan a good trade, stock selection, trend, timing.
Yeah.
You're watching out for your bad trades, which is willy nilly, no reason, no rhyme or reason. Which is what I would say what normal people do. Normal people will see a stock on the news. Hey, this stock does X Y Z, and then they'll be like, "Oh, I'm gonna buy that stock," you know, and then just buy it. And that would be bad because there's no catalyst, there's no planning, there's just willy nilly, and the results are going to be whatever the results are going to be, probably bad. We're trying to get 70-30, right? 70 wins to 3 losses. I mean, 7 wins to 3 losses, correct?
Mhm. Yeah.
So when you're looking at your trades, you're trying to hit that number or higher. and you want to perform a good trade, and you want to get to that higher ratio of win to losses, and you're looking at this new word I just used now, catalyst, the right catalyst, timing, patience, and you're performing a good trade. You're waiting, and then you'll have the result. And you want to record your results. For example, are you still journaling your trades, or are you doing it on the computer, or what?
Yeah, right now I'm doing a little bit of both. I gotta do a little bit more consistently on one place, but I'm doing it both places right now.
I want you to uh, practice writing in your journal, because your journal is going to be there ideally for life. Like your kid can come behind you and read your journal. If you're on your computer, the chances of your kid or somebody else looking at the work you've done and being able to access it is low.
Hmm.
The nice thing about a journal is someone else can go behind you and see what you've done, and that's like your work. Look what he was up to, and you can more importantly, you can look what you were doing 2 3 years ago, and maybe get some good ideas. Improve your trading. And what are you doing when you're journaling? You're doing accounting, accounting, meaning that you can, if you have a proper journal, right, you can look at your trading account. You can write down your balance here. We have, I don't know, 85K, and you can go day by day. Next day 82K, next day 87K, next day 88K, etc. And after 1 month, you can say, look, I went up to 90K. I went up 10%, right, or 5%.
Hmm.
And then you can look at the market. S&P went up 8%. Well, you weren't too smart. You didn't beat the market. The market went 8%. You went up 5%. But you have a result. You have the information about how well you did,
Yeah.
and then you take that and you try to improve for next month. And you can do it. Ideally, if you can do it month to month, you can do it for a year. And that's what mutual fund managers do. They have to report. They have to show what they've done for the whole year. This year, our fund made 40% return, and the market only did 20% return or 10% return. So we outperformed the market. We beat the market. We made a lot of money, and there's
Mhm.
some genius somewhere in that group that made all these trades happen. What usually happen is the market goes up 30% for the year, and your fund went up 18%, and you think you're a genius. And what happens to a lot of traders. And if you lost some money, which is also, you want to face that, by the way, if you lost money,
Yeah.
that's actually the more important to journal it, to record it, because if you lost the money, look in your journal. Your journal will show you were they bad trades. Do you got to improve your trading? Do you got to improve your stock selection? What is it? Timing. You can look at your trade. Today, I did a Hims and Hers spread. It was in a good uptrend. And the next month, it took, we got out, I don't know, 40% return, success, one win, 1 star. And then you look at all these trades. You have 10 trades, and let's say you have 9 and only 1 loss. Well, that's great. And then you look at your win-loss ratio in your journal, write it down. You look at how much you've made with the return in your journal, write it down. You can compare that, month to month, and try to improve.
So question,
Go ahead, go ahead.
yeah, just a quick question about when you're tracking your trades, right? Like, so a lot of our trades when we're opening a spread or doing covered call, unless I'm doing a weekly expiration, and I'm taking like my weekly notes of the trades that maybe I opened, some premiums I've received. How do you like, do you keep all the trades in one place or do you just keep rolling them over? Like, so if I opened this a week ago, then in my journal next week, where am I tallying up for that trade? Like when it closes or whatever. Like, how do you, just curious, how do you track that?
I put a little bullet point. I put like a little dot, and I put a circle in my journal, and that is a trade where I opened it or closed it. And then, so the actual on the page actually shows a positive trade. I open it here, I close it here.
So you could have opened it like, uh, 2 weeks ago, and then you're closing it, let's say today. So you would have an entry of opening 2 weeks ago and an entry of closing on the page that's 2 weeks later. You're not going back 2 weeks ago and then closing it there.
Yes, however, when I close it, I'm putting if it was a win or loss, and I'm putting the return.
Okay.
So when you open it, you just have the open.
Yeah.
When you close it, you're putting the bullet point. But when you close, you actually have it. You're actually not necessarily showing the open, but you're showing the profit and the return when you
Yeah.
close it.
Like, and the opposite in the case of like a covered call, when you open it, you get to write in like what your
You're
previous.
selling, and you write that amount, then you buy it back, you write that amount, and you put how much money you made.
Got it. Okay, sounds good. Yeah, I'll stick to the journal more for a little bit. I was trying to get all kind of techie with it where I could have more data so I can run reports on it and shit. But I noticed
You
that
can
it's
always do
the harder
that,
you
but
make it for yourself, the less likely you are to do it. It's kind of like where I'm at with it. You know what I mean? Like
yeah,
trying to like do it all perfect and do it all nice and shit. And I'm like, I don't want to do it anymore.
you might be doing too much planning.
Especially when the
And
market was down, you're like, man, fuck, I don't want to track these trades.
you, but you have to like remember
I know,
like
like that's the time to know.
that's where I'd like to bring in Mr. Morgan. You can't just trade and not have a journal of it. You can't. You don't have like you can't not have a history of your trades. You know,
Right.
because you have money in your account. Where does this money go? How does this money get there? Where's it going? You know.
Yeah.
And
Yeah.
sometimes the hardest thing for a trader is to look at their trader to see that they failed these trades and to do better and to recognize that they did something wrong. And that happens. It's pretty apparent if you're not consistently growing your account, or if you're not happy with your trading, you're not making money.
Yeah.
And a lot of people, like they say, most traders lose. It's because they're not doing they're not doing the work. You know,
Yeah.
they're not doing the hard work. It's not just luck, right? It's patience. It's having the knowledge and then applying it.
Yeah.
So hit the journal hard. Write a bullet point for when you open a trade, and then when you sell it, have a bullet point and say, I closed it here. Here's the dollar amount. Here's the return, the ROI. And you can also put the time, 2 months, 2 weeks, 2 days. And a more consistent journal is going to help you a lot. And then after that, I would take it to the computer. Then I would take it to the tech and see what kind of spreadsheets you want to do. I'm not great at spreadsheets, but if you do that, then that's a good skill to have.
Yeah.
You can see everything more clearly. Though I just don't do that myself. Maybe when I see some of your
Oh,
spreadsheets, I'll get some
yeah, there's pluses
ideas.
and minuses to it all, right? Like in the stuff that's on the computer, you can potentially access it like your phone or whatever. But then if if you don't have a journal on you, type of thing. But anyhow, I'm with you. I hear that. I'll start doing that a little
Yeah,
better.
do the work. And the journal is anybody can do it. Like it doesn't take an iPad or a computer. You
Sure.
can literally you go to Barnes and Noble, pick up a pad and paper, and start writing notes and clear, concise notes. You can go back to ideally for a lifetime. So I want to hear from you about where you need help the most, or where you can improve, or you have challenges the most. You've had quite a few, I think, golden nuggets along the way, and you're applying them, and I really appreciate how well you've done. I think you're doing great. And like the next, let's say, 1, 2 years, 5 years, you're gonna have a real result on your success in trading.
Yeah.
And it only takes application and patience and time. And you have all three really. You're not a very old dude, so your whole life's ahead of you. And just stay focused. Are you
Yes.
writing goals?
Yeah. I think I've been doing my best to apply like kind of the full circle. I think we recently talked about I've been paying bills from the account. I'm trying to kind of really just live the whole journey of like retiring from the stock market, right? And um to your earlier question, and yes, about goals. Yeah, short-term goals, medium-term goals. I think it's still in the works, and I do like the idea of like how you and I talk about.
Okay, you
All
were
right.
saying, where are you at?
Yeah, so one of the things that I want to talk about that I think I need help with is just refining the kind of skill set of so like we sell covered calls, right? So I mean specifically talking about, my Tesla trades. So,
Can
kind of
I improve? Can you say right covered calls? It's just more proficient.
right covered calls.
Yeah,
All right,
because when you say selling, it's not exactly the same thing as writing. Okay, so
fair
go
enough.
continue.
Okay, so we're writing covered calls, and as you know, with like Tesla, I'm also swing trading, like let's say the stock, and we're writing covered calls. The one thing that I'm not doing that great with is let's say, and I'm watching technicals daily and weekly, so I'm kind of understanding where the stock is going. Like, okay, if I think it's going to break and go higher, or if it's going to come lower, using those like understanding of that so let's say if I see the stock is going to go up, what preemptively should I do to my call here? Raise it or lower it if I think it's going to come down? Same thing. What do I do now? Do I raise it or lower it? Like kind of trying to get ahead of the move to benefit from the move, thinking from a trading style, not just from like I understand the value of you sold it because we're talking now about leap. So if we're selling the leap, if you just hold it, you're still getting time decay. Doesn't really matter too much how you move it. But thinking of it from the trading mentality, I want to refine like knowing when I should be moving my strike up or down based on, let's say I think okay it's gonna go up this week versus I think it might come down this week. So I can kind of play that, a little bit more calculated.
I think you're doing a good job learning these mechanics. I call them, and Tesla's a great example. So let's use a real example, and I could answer it a little better. So
Sure.
give me a Tesla position you have that you're thinking about, and I can talk about how I would actually trade that maybe a little better.
Yeah, I mean, let's just start with the one that we know that. So right now we have, let's say, 100 shares covered with 260 leap, 260 call. That is, I think it's June 2027. So, the stock is today at, let's say, I don't know, 340. Okay. So let's say going into this week, I think the stock's coming down. Let's say I think it's gonna be maybe having a red day, or let's say it's a red in the morning and it might turn in or
We had
whatever.
a big week last week, so it probably will come down this
Yeah,
week.
so let's say it's coming down. Now I'm at 260. Right now, it's weighing against the account because it's in the money. When it's coming down, the weighing is gonna kind of come back down towards like the premium price that I got and potentially go into profit mode, but it may not go that low. However, if I'm aware that I think it's going to be going lower, what would be like a way I can play this that I have?
So on the Tesla leap, well, first of all, it's a great trade, great example. You have a great stock. It pays a great premium. I just want to remind, like, you
Yeah,
can't do
yeah, no,
this
I
to any
like it. Let's
stock.
see.
You can't
Yeah.
do it to any stock. Okay.
Mhm.
On the Tesla leap, what's your how much did you get for riding that leap? Do you remember on the 260? And you have it times two, right?
Yeah, I have times two.
And the Tesla shares, your average price is around what, $300?
No, it's a little high because I sold
Four
the one
four
that
hundred
was in
dollars?
probably yeah in the high 350, probably close to the 400. Yeah.
Let's just say 380 is your average price, and it doesn't matter exactly the average price. I'm just using it for example on the.
So for the
So
260, I got paid about 10K per. I have two, so I got like 21K almost premium.
I got about 10K. Okay, so here's an interesting point, and you have to take this, for what it's worth. It's pretty deep. In this case, if your average price is 380 and you sold it 260, but you've only got 10K, that's actually at a loss in a way
Sure.
because you're probably doing it to protect yourself, like in desperation mode, which is a thing. You have this shares of Tesla at 380, let's say average, and it's coming down. So now you want to lower your leap because to protect you, right? And if you, let's say Tesla is 300. Let's say it goes down 80 points, which it probably did on you. Did on me too. So now it's coming down. Now we want to move our leap to 260 to protect ourselves, right? Not the ideal time to do it, but you're doing like in a desperation mode. So we should have, let's say Tesla was 300
Okay.
and we got 10K. We should have got 10K to pay us to, if we're selling at 360, 10K gives us, hang on one second. Right. So you understand that you're writing to 260 and you're getting 10K, so it's paying us to 360. Does that make sense? So we should be getting 60 points or $6,000 premium profit, yes or no?
Mm-hmm.
Because the stock is presently at 300. You're getting 10K for selling to 260, which pays us to 360. Does that make sense? 10,000.
10,000 is a 100-point move, right?
Yeah. So the 260 strike, getting 10K pays us at 360. Does that make sense?
Yeah.
And the stock is 300, which it probably was around 300 when you wrote the 260, give or
Yeah.
take. So the first lesson is you got back 6 grand. That's a benefit. Put that into action. You know, you could just let it build your maintenance, your cash, but you can also put it toward maybe some IONQs, some Rigetti, some qubits, something to get a monthly return. So I'm gonna write that down. Reinvest cash from Leap CC. Okay, remember that's important. Or put or naked put. But when you do the call, it's more apparent because when you do the call, it brings the money back in your account. Where it's a put, it pays you at the same time, so you have to figure out how much money you got there. So when Tesla moved up this week, right? What did that do to your 260 call?
It was weighing against the account, so it would show loss.
Right. So it kind of like tapers you off.
Yeah, so like just for example, it's about in 7K loss,
7K loss.
74.
Okay. Okay. And then remember, your Tesla shares have an overall gain because
They're long, yeah, because so you're net long on the delta.
if your 260 has a 7K loss, your share should have like a 10K gain or like a 9K gain or an 8K gain. Am I right?
Yeah.
From the time you did the cover call.
Yes, yes, yes. Share growth. Yes, it's come back.
So I just want to be clear, on the whole, you're long. You're making money as it goes up. But if it goes down, you're losing, but you're not losing as much as if you just had the shares. Because when it goes down, you're short the 260. And if the delta, is the delta about 70 right now on that 260?
I'm not
70,
sure. But
75? Because it's important to know what the delta is, because if you're, let's say your delta is 75, okay? So that means that you're only 25 delta long on your shares and adding the leap. So if
mhm.
the Tesla goes up, let's say there's a 20-point move to the downside next week. Let's say it goes down 20 points next week, right? Instead of losing $2,000, which you would lose on a 20-point move, you're going to lose 25% of that because the delta is minus 75 on your 260 leap, minus 75, and plus 100 on your shares. So you're only going to lose $25.
Delta 78.7.
Perfect. Okay. So that's 22 delta. So if
Yeah.
Tesla goes down, to be clear, if Tesla goes down 20 points, which it could easily do that
Yeah.
next week, you're going to, let's say 25 points. Let's be a little more deliberate. Multiply 25 times 100.
500, right?
So you're going to lose $2,500 next week if
Yeah.
Tesla goes down 25 points. Because, wait, no, that's not right. Your delta is 22. Let me do it
Yeah.
right. I did it wrong. Your delta is 22,
So I'd
and we
lose
go down
50.
25 points. So what's 25 times 22?
25 times 22?
Yeah.
550.
You're going to lose $550.
Okay.
Because why? Because you lost 2,500 on the shares, but you've gained 1,500 on the short 260 leap. Are we clear?
Okay.
That's why I want you to trade at Schwab. I want you to see that delta all the time. The delta meaning how long or short you are. Comparing your shares, adding up your shares, your options.
Yeah.
And if you have a minus 78 on your 260 lead, which is fine, that means you have a net positive 22 delta on the total on your shares plus the leap, which means that the Tesla goes down 25 points times 22, you're gonna be out $550. And if Tesla goes up 25 points next week,
You're
you're
getting
gonna gain
550.
550. Okay,
Sure.
so write that down too. You're gonna gain 550 or lose 550. So it's not. It's the position by itself is it's fine. It's a good position. You know. It's not like you're at a bad spot or you have to worry too much. Um, um, and in a sense, you're going month to month. You're getting some time decay. I would look because you're in a 2.5 year and you wrote the maximum when you wrote the 260. I would look
Yeah.
to just to bring it to the 3 year to December. You know about that?
I think it is. Let me see.
I thought you told me it was June. Double
Um,
check if you have a June on the 260 or December.
no, I'll have the June on the 220.
You have a
260.
220 and two 260s.
Yeah.
Well, let's look at the 220. I just want to see what you can get for that.
220s on the June.
Um, what you want to do, you want to look at to see if you think Tesla is going to be going up in the next, let's say, month.
Okay.
Okay. And if it is, then you want to be proactive and raise that 220. Okay. First thing I'm going to do is I'm going to see how much you'll get. Just move it to December. I'm going to put plus 220 call, buy that, and sell the December 220 just to move it to December. And you know what? This actually should, if Tesla moved up while you had this call, it should release some buying power. For 6 months, it's showing me, is that right? $997,000.
You get an extra $1,000 just by changing
That
the
does
calendar.
that sound right?
Just to change the calendar? Maybe. Let me see.
That's actually more than I thought. I did it right.
So we're just gonna go to December. What strike? Same strike?
Yeah, the same straight.
Okay. So 220, just moving it up. Yeah, 998.
Okay, so let's say you don't know if Tesla's going up or down. Okay, I would think to move it to December to get $1,000 back in your account. You can use that to buy 100 shares of that Qbit, which did great, by the way. Write this down, QBTS. This one
I,
outperformed the
I
quantum
had a covered call
computers.
this week on that. It was great.
What you do? What you
I
do?
did a weekly, yeah, different account.
Wonderful. And now, what was the catalyst for that? Do you know why? You just followed it and did it?
Qubits, I was following it for a minute, yeah.
I saw some positive news on IONQ, and I thought
Yeah.
that was a good catalyst. So I built to my IONQ position this week.
I
I
was
like
building position in qubits when it was at $5.
okay. Okay,
Yeah.
I increased my IONQ this week. I'm about to do a Qbit. I don't have a Qbit right now. But example, you get $1,000 from just moving the calendar, and you can buy 100 shares of Qubit, and on the monthly on that is what is a dollar. Oh, I just showed you $1.50 for the cover call. Did you see that? So you
Mhm.
can pay more than 10% on Qubit on the monthly, which is a great return for the cover call, and you can generate that money just by moving your calendar on the Tesla.
Okay.
And I would say to do that because I believe you wrote the June only because that was the maximum. The only advantage of not moving it is that it'll decay in 2 years instead of 2.5 years.
Sure,
Makes
yeah.
sense? So it decays faster. Usually, you can tell the difference on the decay on the 1 year and then the 3 year, Or like then on the monthly, that's like the biggest example. Or the weekly. Weekly is this, monthly gets you this, yearly gets you this, and then the maximum gets you this, you know. So if you're on a 2.5 year, you might as well make it a 3 year, get more money. Okay. But back on your trade, look at if you think that Tesla's going to be going higher.
Mm-hmm.
If you do, be proactive and raise that 220 to 2. You can actually raise to 260, and then also move it to December. Can I look at that?
Yeah. So let's see.
I mean, unless you think we're gonna go down right now, then I would keep the 220. But let's say you think it's gonna go higher, right? So I'm gonna pick up the 220.
Yeah, it's only going to be 865.
No, that's not right because we're taking the 220 in June and we're making it at 260 December. A little more positive. Does that make sense?
Yeah, that's it's saying net debit 865 unless I did it wrong. Buy to close 220, sell to open 260 December.
No, but you're going from June to December. Oh, okay, okay. Oh, you're right. 865. I was thinking it's gonna be a little more. So you're still getting money back, great, but you're being more proactive, and you think the Tesla's gonna go higher. So this is what you would do on a monthly basis. You try to look at the trend and see if you think it's gonna go up, and then you can change your leaps.
And same
Now,
thing on the way down. If you think of the month it's gonna be down, you can lower it now.
because if you're not proactive, then you're gonna have to do it in desperation.
Is it better to lower it if you think it's gonna go down in a month, or just roll it to at the money? I don't know.
If you're out of the money, you can make it at the money. But if you're at the money, then you can lower it to be in the money.
Okay.
Remember when I was telling you about I had a session with a mod, and we had a great run up in Tesla, 480 something. And we thought, let's do it deep in the money cover call to capture all these gains. So when you have a swing up in the stock, which we did kind of have a swing up in Tesla, you think it might be going down now. Like you just told me it's going down now. So now let's select to move down into the money a little bit more,
So
which will
these are
bring,
already technically in the money, the 260 and 220. So you would suggest lowering them even more
if you think it's going down, yeah, because you have a current position and you want to
make
improve
money.
that. Okay,
So you get some more
so
credit back, basically. That you start
more
becoming more
defense,
credit. Yeah.
more
So
defense. You're actually still long, okay,
yeah.
but it's going to be the difference between losing to 550 and losing, let's say, 350 or 300. You see the difference?
Yeah.
You talked about losing 550 at Tesla drops 25 points, which you will lose on that one contract. If you multiply by 3 positions in Tesla, which you have, that's $1,500, $1,600. And if you move your leaps lower, that $1,600 may only be like 1,100, 1,200. So yes, you think Tesla's going down. Now you don't have to do all your positions because maybe plow lowers rates and then it shoots up. You know, we've been talking about good news makes the market go up. Trump had a big deal with Syria, something that a
But
Democrat president
so
would
hold
never
on,
do.
just to recap, right? So you're saying on terms of lowering and raising, look at obviously the monthly thing, but on a week to week basis, like let's say if we think it's gonna go down at any part of this week, it's better to lower the call, get some more money back in the account, and then let's say it turns around and starts going back up. And at that point,
Well, hold on right there. One thing at a time. Yes, if we think it's going to go down, let's say at least 25 points. If it's not going to at least 25 points or more, it's not even worth doing it because these leaps cost money, the bid ask. You're going to lose on the bid ask, correct?
so the move has to be substantial.
Yeah, let's say 25 points for Tesla, right?
Yeah.
So, yes, so take your 260 and make it just to say one and make it a 200, right? And look at how much money you get back from that, right?
Mhm.
I'm just gonna look at that.
Say it
Okay,
again. What strike?
you're taking a 260 to 200. You're in December, right?
Yeah, let me do that.
Okay. Oh, no, you know what? You have a 220. So why don't you put it at 220? Is there any reason you wouldn't do that? Let's just do
No,
220.
I just did that. 220 to 200 give me about 1,000 back.
Okay, let's just. So you get 1,000
That
back,
was for the same calendar. I didn't. I
and
didn't.
then like if you look at the 260,
Yeah.
I'll show you the effect of that, and this is why you need to have a Schwab account. At least, get the Schwab account to get the app to look at the delta, right? So delta 79 on the 260. I have a 79 on the 260, right?
Okay.
And then on the make
You
it. Do
want
you
to
say
know?
make it a 200 or 220? Which one?
Let's try 220 first. So 220 is 18.
The 220. The
Seven,
delta is showing 83,
then
and then the 200 is showing
28. So like 30, 70.
85. So at so the 260 is 79 delta.
Mhm.
The 220 is 83 delta, and the 200 is 85 delta. So
Okay.
so this is what happens when Tesla moves down 25 points. We already discussed that you're going to lose 550 because you're at delta 20. You're at delta 78 times, which is 22 times 25 points is 550. But now, if you move it down to say 200, now it's delta 85, which means you have a 15-point loss per point in Tesla, not a 22-point loss. So now the difference is going to be, and you still want to stay long because Tesla's still a great stock. I can always shoot up, right? Point one, sorry, 1.5 times 25. Instead of having a 550 loss, you have a 370 loss, 375 loss. That's delta 22. Bring it down to 15. So
Okay.
100 shares of Tesla gives you delta 100. Minus the 260 December gives you delta 79. Bring it down to delta. Bring down a 200 strike gives you a delta 15, which is a 7-point increase. So you're going to be saving $7 per point. That's what it's going to do. Bringing down that that cover car leap, bringing it down into the money. Now, there's one thing I didn't discuss, but this is obvious, but it probably won't happen because at the end of the day, you're agreeing to sell your Tesla either at 260 to 200. And this is only really going to happen if it expires at the expiration. But like you
Mhm.
said, you're swing trading. So you're just trying to
I'm
get the
trading.
benefit month to month on, you're trying to get the benefit month to month on your account. So you're going basically from long to less long if you think Tesla's going to be going down a little bit. That's what I would do. That's what I would do. I
And
wouldn't.
then
I wouldn't go. I mean, obviously, if you're an advanced trader, aggressive trader, you could just buy a put. Tesla's going down. I'm going to buy a let's say a put at the money.
you want to hear one of my trades for
Yeah,
later?
yeah.
Okay, so this is a trade if you think that,
Before you go on to that, do you just see how we're lowering the delta and it's protecting you on the downside when we think Tesla's coming down? However, we're still long. It's a small adjustment, but it's a
yeah.
meaningful adjustment. Is that?
Yeah, so the more strikes you lower, the less delta you have
Yeah, yeah.
on the less,
And the
yeah.
higher you go. So let's say, oh, dude, Tesla's gonna blow up, dude. We're doing this robo army. We're gonna do the robot Uber. So now we're gonna move our leap from 200 to freaking 400. You know. And then you'll know in a month or 2 months if you were right. If it goes up, you're glad you rose it. But if it doesn't go up, then you were wrong. Makes sense.
Yeah. All
So
right. We're gonna have to.
you're raising your leap up for a bullish, and you're lowering it for a bearish, and that's like one of the best things you can learn to be great at.
Yeah. Yeah, that's the thing. I
Manage
think
your account very well.
if I can get a little bit better at that, then I think it really, because I already have the swing trading like thing down with equity, but I want to now get that kind of rhythm with the leaps, because especially in this market, it's great because you can make just like in a matter of a few days, a couple $100 here and there, just swinging them around.
Yeah, yeah, right. And that's the other part of the trade. You can sell. You said like I don't know, like 10K. So you sell it for 10K. It lowers. You can buy it back for 9K.
95, you get five right away, whatever.
Yeah,
Like,
95. Yeah,
yeah,
sure. But patience, right? Let your winners run. So if it's doing great, it's going down. Just try to wait a little bit.
yeah,
Patience, you
just
know.
wait it out for sure.
Don't just take like a $500 gain if it's just like. But knowing that the channel, the bottom of the channel is a lot lower. I
One of the
mentioned
positions.
I
Sorry,
mentioned put, and then you jumped in and told me something. But I just want
I
to
was gonna tell you a position. So, like for example, instead of buying
hold
a
on one
put,
second. Hold that thought 1 second. I want to say something. Tell me the position in
so
one
pull up
second.
Tesla. Let's look at the June 20th. Um, you're gonna like this one, I think. So we're gonna do in the money put spread, debit spread. We're gonna buy a 300 and we're gonna sell at 315.
Okay, as we do that, I want to show you the 6 month. Just show you what I think.
Oh no, sorry, that's a bullish spread. Um, put spread will be 370 to 360.
Okay, I just want to give you my 2 cents. Looks like it's going up, my friend, by itself. If the whole market comes down, yeah, it'll come down. But Tesla by itself, bro, is going up.
Yeah, but it's also hitting that 250 the 350 resistance. If it breaks that, then I do agree it's probably going back up.
But look, it broke this one.
Yeah.
Yeah,
Well, when you say
yeah.
it's going up,
If it breaks this,
yeah, it's going
it's
up.
going up. If it breaks this one and then this one, and you better raise your shit up.
I know.
All right, now tell me the
So,
trade.
so wait, I agree with you. I do think it's going up, but the question here is about what time frame are you talking about? I'm talking
I'm
about
talking about
for
like
the week.
freaking 6 months, man.
Yeah, I'm talking about for the week.
It's
So
already down in after hours. You see the whole market went down?
I know that's why I'm saying I think there's a trade here. So
I was
my
gonna call you. Why the hell the whole market go down? All my
is
shit
because
went
of
down. Like
Moody's. Moody's came out and said
I didn't
they're
even look at the news.
downgrading the the US the treasury or the
Isn't
market.
it fucking funny how like they can have a newscast and if they were shorting before their own cast, they can make
But
hand
they're
over
just bringing it
fist
down so they can buy it cheaper, right? At the end of the day.
manipulation.
Anyway, so the trade I have is to be
Tesla, right?
safer, is we buy the 370 put, we sell the 360 put. It's a 10-point
One.
spread.
Okay, tell me the trade
So buy the 370 put, sell the 360 put.
for what strike? What month?
This is June 20th.
Buy the three. What?
70.
Buy 370.
Sell 360. 10-point spread.
Sell 360.
Okay. And guess what? You're gonna get 360 profit for 640 cost, 56% ROI.
By doing nothing.
As long as Tesla stays where the fuck it is right now, it'll be all right. For the week, I think it's gonna come down a little bit. All we need is one day for it to come down 10, 15 points. You can close the trade. That's kind of my plan.
38 points is kind of a hefty price there. But yeah, it only costs you 640. 1 month. Why don't you do it? Why don't you bring that to the meeting on
I
at five
am. I'm
o'clock?
bringing that one. I have a couple others, but my
And then
point.
tell us. I need you to tell us the break even, the win and the loss. How do you lose? How do you win? How do you break even? That's what I need you to tell when you do a trade.
Oh shit. Okay.
Okay.
Yeah. So I was thinking like you could do this trade. If you're bullish on Tesla, you could still make some money. I would, I don't think it's going below 300 this week. So you could buy a 300 call, sell 315. That's a 10-point spread, or that's actually a 15-point spread. That costs you 1125, but pays 375 with a 33%. Um, the best trade I have, you're gonna like this one. It's a Nvidia put spread. 140, buy the 140, sell the 130. Okay.
Let me pull it
You
up.
you're gonna pay 495 to make 505. So it's 102% ROI.
Okay, I'm on the video. Is this for June?
Yeah, same, June
Okay,
20th.
tell me the strikes.
So 140 put, you're gonna buy,
Buy 140.
sell 130, 495, or maybe five is the cost. I saw it earlier, it was 495 to make 505.
Sell 130.
Yeah.
So what if Nvidia goes up?
If it goes up, you're basically okay till let's see. So your break even here would be, how do we do that again? We you added to the lower put or the higher put?
Right now I'm looking at 495. You're looking at making 505, which is 100% return.
Mm-hmm.
So you would subtract 505. Your investment is 505. So you
No,
would
no. Investment is 495.
your investment is 495. Let's say 500.
Okay.
You subtract that from
The 130? Yeah.
uh,
145, maybe. I don't know. I'm
you're
not
you're 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 losing money when it goes up, right?
sure. Yes.
So you're long. You do it by your long put. So it'll be 145. You
Yeah.
break
So
even.
145 is your break even.
Yeah.
Right.
Now you think that won't happen?
I think it's gonna come down. You know why? If you look at the weekly chart, um,
Now let me ask you this: what's the problem with going just a little higher to be more safe? We could do that.
you could go a little higher. I just thought it was very juicy to get a double up like that.
Yeah. We'll bring that to the meeting now. F5.
And look, this is why I'm saying. Can you see this picture?
Yes,
It was that look like looks like a Head and Shoulders maybe.
a little bit. Yeah.
So that yellow is where we're at. I think it could maybe come down.
Um. Well, why wouldn't it go back up for a fourth bar up?
It could. I so my guess here
That could
is
be a classic Head and Shoulders though, if you
my
did it right.
my guess here is I want to see how it reacts tomorrow. Here's my thing. Two ways to play this, right? I think it's a good trade. I think it's gonna come down to timing because let's say Nvidia starts to pull back. Well, then it's gonna be expensive to get into this trade. But let's say Nvidia starts to go up, then maybe instead of the 140, you start at the 150 or 160 and then sell the, 10 points below. Or sorry, buy the 10 points. Yeah, yeah, sell the 10 points below and just wait it out for the June because eventually that it's gonna have to pull back.
I
I don't know.
have 132 and after hours, so it's already down 3 points. So that option is going to actually be more expensive. It's probably going to
That's,
be
that,
505.
so it's probably not gonna be as juicy now, but I don't know. See,
I would. That's a decent one. I would think just to go a little bit higher. Um, but you know what? You have that's good. Just go with that. Bring it to
and
the
then
meeting.
I have a Q's put spread too, 540 to 530.
Um,
So in the group, just FYI, I'm gonna share the SOXL trade because I'm gonna do that again this week.
can you
Uh,
explain that also? Why that is that the ETF?
why is what?
Why that would be a good trade? Explain it a little bit.
Yeah, I mean, there's a couple of things, right?
Not don't explain it to me. Explain it at the group.
Oh yeah, sure. I will. I'll talk
Because
about it.
people like they want to know like what am I getting into? What's this
Yeah,
all
and
about?
why? Why is it? Why now? Yeah, I'll give it a little explainer of what my thoughts are.
I want to give you a position to talk on the group, and I also want you to. I'm gonna have open panel. We can just discuss.
I'll only probably share like one or two. If people are interested, I'll share more, but I don't really want to share too many trades. I want to hear what people got. Oh, the
Yeah.
SOXL one is probably good.
Did you get a chance to hear the last meeting?
Uh, our last meeting or the group?
The group. That's the group.
No, I did not. I was reviewing our
We didn't
notes.
have enough questions,
Let's
so we
see what
didn't have
happened.
more. We didn't have more questions.
I
So
asked Imad if he would join. I'm gonna text him, see if he can join it.
be looking to get him on.
Yeah. All right.
Okay.
You call it a win then?
Call it with my friend.
All right.
CF5.
See you.
I'll send it to you when it's ready.
I think it's gonna send you multiple recordings. Let's find out.
We'll find out.